today we're going to talk about a strategy that I use that I find that is very profitable for me, and this is for day traders who are scalping on smaller time frames. Okay, so the first thing we want to do is we want to set up we want to have a chart here. Okay, so for example, I have Tesla. We want to go here, we want to make our chart dual. Okay, make sure you have your symbol, crosshair, and drawings all selected. Okay, so whatever we draw here should replicate on the smaller time frame as well. Okay, so on both time frames, what we want to make sure is we have is all the indicators that are required. Okay, so volume, EMA, we want to have the exponential moving average, which is a 5-day, okay, EMA. And also we want to have the value weighted average showing up here, and we want to make sure our styles, we only have the VWAP selected, not the upper and lower band. If you have the upper and lower band, it'll look like this. We don't want the upper and lower, we just want the value weighted average. Okay, so this is an example of Tesla. Okay, so if we look at this right here, we want to get in when price crosses above and closes above the 5 and the value weighted average. Okay, so this is where you're going to enter on the 1 minute time frame. Okay, as we can see here on the 5 minute time frame, that gives us a decent entry here. So when are we going to exit? We're going to exit on the 5 minute now when the price closes below the 5-day EMA. Okay, so remember, when it's a green candle, it opens here, it closes here. A red candle opens and closes here. So this is where we're going to exit right here. Okay, so this entry right here would have taken us from 874 to about 892. Okay, so this is a very good profit on Tesla on Friday using this strategy. Okay, this is a very simple strategy for anyone to use, and it's very easy to execute, and you just have to follow the discipline of it. So enter on the 1 minute and exit on the 5 minute. And if you want to go short, for example, let's just say we wanted to go short here, so let's find a stock that we want to go down on. Okay, let's say we look at GME over the past couple of days, you know, and we want to use the same strategy here, right? So let's see right here. So this was GME. This is a trade that I took. That's why I just pulled it up here. So this was on the 14th of March. Okay, so we want to pull up the same thing here on the 1 minute time frame. We want to pull up the 14th. And what we can see here is something very, very similar. And we're going to be able to execute the same trade that I just discussed with you guys. It's very simple to take this trade here. All right, so let's have a look here, right? So we're seeing GME come down here on the 1 minute. Price closes below the 5-day EMA right over here. Okay, and you can see it comes down very, very quickly, and it crosses back above. Right here, you exit, right? And then you can see that GME just keeps going sideways, but then price, that's one trade that you could have taken, and then there's another one right here. Price closes below the 5 and the value weighted average right here again. So this trade wouldn't have been that much in profit, maybe 10 to 20%, whereas this second entry point would have taken you from 89 all the way down to about 83. But then we see we have a pullback, we exit when the price closes above on the 5 minute. So this is another about 10 to 20% trade. Okay, sometimes yes, you are going to miss out on the bigger move down because you're waiting, but if you look at Tesla, it does represent the opportunity of, you know, giving us very good successful trades. Do you have to be disciplined with this? You cannot go away and you cannot keep holding. If you do, you're not following the strategy. So this is a strategy where you enter on the 1 and you exit on the 5. Hope you guys enjoyed the video.